Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 19th of May and it's been an okay market till now. If you ask me, it's not yet broken down, but the indications in the market are not looking pretty because the news flow right now is not very supportive, especially for the international markets and whatever happened over the weekend for US markets. The news flow is slightly tight and we will have to see what the reaction of the US markets are going to be. What the trigger was, as I had shared yesterday, that there was a ratings downgrade that happened by Moody's for US debt, and that is kind of creating a issue. And if you see, the US futures are already down minus 1.6%, and the US market is yet to open. So US market will open somewhere around 8 o'clock our Indian Standard Time, and that is when we will know how the reaction is. And what is going to be more important is how the US markets actually end up closing. So the close is more important than the open. As of now, it looks like there's a lot of pressure on the US markets, and that pressure, frankly, is going to get it's going to show in the other markets as well. So that is, I think, where we are also kind of soft today. We opened slightly higher, but right now as we speak, it's almost 3 o'clock and we are down minus 0.3%. So it is slightly looking tricky right now. We will have to see what the impact is on the overall markets. So I will take you through how the proceedings have been for the day and what are the things to look forward to. This is the Nifty chart. As you can see, today is a red candle being made, and this resistance of 24,800 900 odd is being tested now. So this resistance now becomes a support, and hopefully we might be able to take the support. If this breaks, then we are headed down. Then we are headed down for some sort of a consolidation, and then the next support is probably going to be somewhere around 24,200. But for that to happen, the markets will have to correct significantly, which is quite possible because the kind of run up that we saw was quite spectacular, and from in one day only we had taken out 24,000 and moved to 25,000, and from there we have been consolidating. So we will have to now break this band, either on the upside or on the downside. If you break it on the upside, then it's all time high. If you break it on the downside, then 24,200 will be the next support that we can look at. Now there is something interesting that is happening in the options data as well. In the options data, it was already weak, which I had mentioned over my weekend video, but today, as you can see, there are 6 crore calls that have been added versus 2 crore puts. So people are writing, institutions are writing heavy calls right now, and the maximum calls being written is at 25,000 strike, which is almost 1 crore calls. And because of that, what has happened is that the total open interest, if you see, is now 0.62, which is worrisome now. It was 0.76. I had mentioned over the weekend that it's a slight niggle that we have to keep an eye out on, but 0.62 is definitely bearish, and the gap also is now almost 5.5 crore options. So 5.5 crore more calls have been written versus puts, which is indicating a bearishness until and unless this gets covered in the next 3 days, Tuesday, Wednesday, Thursday. We might be looking at some pressure on the market going ahead. Also, what is interesting to see is that this is the straddle data. In all of this today, the straddle actually went down, which is good news for us. So the straddle opened at somewhere around 346 odd. And it is now trading at about 305. So there's been a good 45 point decay in the straddle, which is good. So in spite of the VIX going up and the volatility going up, the straddle prices are going down, which is good, and this is for the near week. So this is one good sign. If you look at it, how the performance has been today in terms of the sector wise, this is how the sector wise performance has been. So yeah, so as you can see, the VIX is up hugely. VIX is up by almost 4.5%. We are touching at 17 VIX, and in terms of the sectors which are not performing well, IT is the leading, and it's for obvious reasons because US market is under pressure. The futures are under pressure, so IT is under pressure big time. Nifty is down minus 0.29% as of now, and still there are about 20 minutes to closing, 25 minutes to closing. So let's see where that ends. In terms of the ones that are doing well, so inward facing sectors like small cap, pharma, auto, etc. are doing well. Financials are doing well. Banks are in green, but anything related to US markets like IT is in trouble right now. If you look at in terms of the heat map for today. This is the Nifty heat map. So there was a Bajaj Auto that did well, but otherwise you have pressure today in stocks like Infosys, and it's been a mixed bag, because Grasim is down minus 2.6%, and I think this is Zomato is down minus 3%. So IT is not doing well today, and rest of the sectors are looking all right. Now let's come to Nifty next, and it's more a green picture over here. Bajaj Holdings is up plus 5.8, DLF is almost plus 3, Hyundai is up 2.2, Pharma Divi's Lab is up 4.8%, which is good. And in terms of the losers, HAL is down minus 2% and Naukri is down minus 2.8%. So it's been a mixed bag. It's not one-way movement today, and that's why you see both gainers as well as losers today. Now let us look at how the international cues are stacked up. So the headlines that are facing today is this futures drop, Moody's downgrade. It's the biggest headline today, and there's one more headline which is crept in, which is that Japan's yields have gone up. So both negative news are coming in at the same time. Now let's see how this plays out. So S&P VIX is up 14%. Okay, US 10 years, this is very significant. It has crossed 4.5. It is now at 4.55. It's up 2.5%. This is very, very bad news. US Treasuries going up is not good news at all, because it is going to spoil the party for the US equities as well. And may I say, for the other markets as well. The futures that I was talking about, Nasdaq futures down minus 1.6% as we speak, and US dollar index is breaking 100. I've told that it looks like there is no strength left in US dollar index. It's going to crash further with the ratings downgrade happening for the debt of US. And in terms of oil is at 65, USD INR 85. That's all fine. Gold is still not started to go up, because there's some downward pressure on it, but still holding at 32, 38. So this is something that I had shared today morning on Twitter. So Moodys has cut the outlook on US debt from AAA to AA1. And what is the reaction? As I had said in the mornings, the US futures are falling. At that point in time, the US futures were down about, as you can see over here, 0.8 to 1%. Now they have added since then about 0.6% more. So now they are down minus 1.6% as we speak. So the early signs weren't great. Asia was down, gift entry was in the red, and risk of sentiment is creeping back. And this is what I had written in the morning. But there was some more news. This is absolutely crazy stuff. Japanese 30-year government bond yield jumped to 2.96% on Monday, is the highest level almost in 25 years. So 40-year yield hit 3.45. So Japan is yields are going up, which is not good. And it is going to have an impact on the yen carry trade as well, because when Japanese yields go up, then people pull out money of the yen carry trade out of US and they pull it back to Japan. The money goes out of US treasuries, the money goes out of US equities, and it's a vicious cycle that happens. So I'm sure there will be a lot of things that will be that we'll have to take into account going ahead for tomorrow. Biggest concern for me right now are two. One is how US behaves overnight, and second is the negative open interest that our markets are developing. So that is what we will have to see. The positives is FIs are continuing to buy, and they will continue to buy, because even if US markets go down, emerging market flows should continue with the dollar weakening. So that is one good news. But when the volatility creeps in, then then the markets do tend to go down. So that is something that we'll have to keep an eye out on. Otherwise, I think it is things are looking okay, because we are going up and so on. But these small things will keep on coming. But one thing is very important, is that the debt market actually controls the equity market. It's not the other way around. So if the debt market, if the US yields continue to go up, then it's going to be very tough especially for the US stocks, but also worldwide. It might have some repercussions going ahead. So that's the update from me for today. Hope you like the video. If you like the video, then do please subscribe to my channel and share it with your friends and family. And for mutual fund portfolio construction, if anyone is interested, they can fill up the form which is there, and I help people design a good mutual fund portfolio as well. So that's it from me now, and I shall see you with an update pretty soon. Take care. Bye bye.